Good afternoon, everyone. Good afternoon. Thank you for joining. It's a pleasure to be here. I'm Duncan James. I'm from a new model consultancy called BeenThereDoneThat. We're a community-driven business. I'm part of that community of chief strategy officers, chief creative officers that help solve marketers' problems much quicker, faster, better, cheaper. And I'm joined by David Sandstrom, who's the CMO of Klarna. David, nice to meet you, man.
Thanks for having me here.
Let's just start off with introductions. Do you want to talk a little bit about your career? Both of us started in the same place. Kara?
Yeah, exactly.
Yeah.
So I started out as a consumer insight manager, a strategist at a media agency. Kara, it still is one of my passions, really understanding people, why people act as they do. Why do people choose a Coke over a Pepsi? Why do people choose a McDonald's over a Burger King? Being very data-driven, being very insights-driven. That was one of my big passions. I then moved on to DDB. I headed up DDB as the CEO for about 7 years. Really got to learn a lot about creativity, the power of creative ideas, being unique, standing out in a cluttered space. I got to learn a lot about working with creatives, which are a different breed as well. Right? And I joined Klarna about 6 years ago for a complete rehaul there. I now run all over their consumer growth initiatives, and I've learned quite a lot about how you run a growth business, like what it takes. So I think I'm nowadays quite good at combining what I learned at Kara, like being insights driven, what I learned at DDB from like the power of creative ideas.
Yeah.
And now at Klarna, like how do you truly become a growth-driven company?
Yeah, and so whilst your title is CMO, you've got quite a broad remit. So let's talk a little bit about that and how some of that past experience has informed how you build teams, how you build this role, because I think although you're CMO, a lot of what you do is very broad across the business, almost kind of chief growth officer type role.
Yeah, exactly. And I think, obviously, as you grow as a business, the role of the CMO changes. In the beginning, it's very much about, the idea, the creativity, getting to market. Now I feel much more like an architect. Like, we operate in 25 different markets. Like, how do we scale this? How do we make sure that's robust once it grows? How do we make sure that's sustainable? Like, not from a planetary perspective sustainable, but what we build is sustainable. So I think much bigger about the things rather than the small ideas, right?
Yeah.
And to me, one of the biggest things has been bringing together all of the different learnings, right? To me, diversity is extremely important, like diversity across, experiences, perspectives, bringing creatives, developers, analysts, finance people together into one room to solve problems. So that is very much about how I lead.
Yeah. So let's talk about one of those big kind of diverse problems around trust. It's something that your business really thinks about gaining from the customer. It's really important to your business. Obviously, you're known for buy now, pay later, but we'll get onto this later. There's a lot more to Klarna than that. But do you want to talk a little bit about trust and how that journey has evolved and how you've tried to build that with customers?
Yeah, I mean, trust to us is obviously a key topic, right? Partly we're in the financial industry, we do transactions, we do banking. Trust is really, at the heart of what we do. On top of that, we also know that banks and financial institutions are probably the most distrusted businesses there is, right? You see them at the bottom of every single trust survey in the world, right? So trust is really something we think a lot about. And the thing with trust has been that historically there has been this playbook for how to establish trust as a bank. Like you use men in suits, you use blue colors, you have marble offices, you talk in a bureaucratic way. So to us, a lot of what I push my teams to do is try to redefine what trust is. Like what is trust? How is trust built? Why is it that people tend to trust Paris Hilton more for financial advice than Goldman Sachs, right? Why do we live in that kind of world and how do we utilize that? And I know we're going to talk to some extent about what we do with celebrities as well, but a big thing to us is really what is trust in a modern world? Why do TikTok creators have more power and influence over the way that you spend money than your bank.
Yeah.
And that to me is a huge thing. And I think we've been pretty brave in how we try to approach trust, like partly with different kind of partnerships, but also like, can you be fun and trustworthy at the same time? Like, can you be energetic, pink, interesting, while you're being trustworthy? So that's one of the big questions. We've also elaborated a lot with design, like can you be extremely, bold and beautiful and eccentric whilst being trustworthy? And it's such an interesting topic for us, this thing around trust, because I do think that is where the big potential lies.
Yeah.
Especially in the very uncertain world that we're in. Like trust is going to be key to, everyone ranging from beverage companies to financial institutions.
Yeah, yeah. So let's talk about one of the big markets that you've entered. After 14 years in Europe, you entered the US, where I live. Neither of us are from, but a key market, right? Do you want to talk about some of the things that you encountered when you entered that market as a very well-known brand in Europe?
Yeah, I mean, the US is obviously, it's the big, everything is bigger in the US, right? So you just have to brace yourself for that thing. Like budgets are bigger, the impact is bigger, the downsides are, everything is bigger, right? And that is sometimes a bit scary for a European company. But I think the biggest thing for us is that money is still very local, right? There is a reason why there are no global consumer retail banks, because money is local. Money works differently in the Nordics versus UK versus Germany, right? People treat money and banking differently.
Yeah.
And the biggest difference with the US is that the US is a credit-based market, right? People know credit, people love credit. Credit makes the US go around, like literally, right? In Europe, it's a debit-based market.
Yeah.
Credit is almost a dirty thing. People like paying for their things straight up. Using a credit card is the last line of resort for a lot of people, right? So it's vastly different. So when we came to the US with a debit product, people didn't care.
Yeah.
Like people did not care because it's a credit nation.
Yeah.
So the thing for us was to really challenge credit instead. So instead of saying don't choose credit, choose debit, we challenge credit. And turns out the more you get into it, the credit industry and the credit card industries is one of the most predatory industries in the world. Yeah. Right? That is what we know. They have very unaligned incentives with consumers. Credit card companies are happy when the consumer is not repaying and going on revolving credit, right? So there are a lot of things that are broken in that industry, and we're there to fix it. And that's just, finding your purpose in that. That is fantastic.
Yeah, no, that's really interesting. I mean, I for one, didn't realize directly that the points that I get are paid for by customers that are not paying their bills elsewhere, right?
No, that's the thing, right? But we had this conversation earlier, and a lot of people tell me, like, well, Chase has all of these points, and it's fantastic from it. They are fantastic, the points, right? Yeah. But someone's paying for them. Yeah. It's not Chase. Yeah. It's not the merchants. It is the consumers that cannot afford to pay their credit card bill and need to go on a revolving credit. So, like, if you take one step back, the credit card industry is a huge transfer of wealth between the unwealthy and the even wealthier, right? Yeah. So I'm not saying you should stop using your credit card. You deserve your points, but bear in mind where those come from. Yeah, absolutely. So as you develop the brand over time, as you think about it globally, what are some of the areas that you're going into? How are you thinking about this brand? Maybe we can talk about the celebrity endorsement as well. Because at first you think, well, hang on, celebrities are superficial, they're not trusted. But in actual fact, it's the complete opposite, right, I think? Yeah, I mean, it's partly that. I think the celebrity thing, if we want to touch on that, is a lot of people underestimate and severely underestimate what it takes to gain people's attention, right? And the vast majority of companies are intrinsically boring. They do not have products that interest people. You obviously have the Apples, you have the Teslas of this world, but they are maybe a handful, right? For all of the other companies, it is extremely hard to gain attention.
Yeah.
Right? And I think a lot of companies are drinking the Kool-Aid by thinking that their product is talked about or interesting or, you know, part of pop culture. That's not the thing, right?
Yeah.
So a lot of what we do is really to build a platform for our products and for our proposition, right? I think we have a fantastic proposition. Very few people in total know about what we do, right? So what we're trying to do with the celebrity partnerships, but also with the likes of Airbnb and our bigger merchants partners, Shein, is really to make sure that we grab the attention of consumers, right? Grabbing attention is hard. I mean, not even the best shows on Netflix get the people's attention nowadays. How am I going to get some attention for my payment products? It's freaking hard, right?
Yeah.
So that's the big thing.
I think we've all been guilty of sitting in meeting rooms assuming the customer is thinking about our products more than they are. So can you talk about any of those celebrity endorsements and how they're working and how you think about them and what you try and get out of them?
I mean, we obviously always try to find a perfect match between what that celebrity is and like how we are as a brand, right? We want them to be interesting. We want them to be part of pop culture. We want them to be extravagant in their way. We want them to be, it's cheesy to say, trailblazers. But that is an important thing for us, right? Most of all, they need to have a way to talk with their customer base and their fan base in a way that we can never do as a brand, right? So when we look at our partnerships with Snoop, with Lady Gaga, with A$AP Rocky, and now with Paris Hilton, that is really what they bring to the...
Quite a collection.
Yeah, they're pretty good, pretty good. That is what they bring to the table. They have a unique ability to engage with their fan base that we will never have, right? In the same way that the partnership that we have with the Chicago Bulls is also one of them, right? We can never talk to sports fans in the same way that the Chicago Bulls franchise can talk to sports fans. And that is why that partnership is extremely important to us.
And so as you think about partnerships, you've got kind of the celebrities that go to customers, but your retailer ecosystem is really, really important as well. So maybe you could talk a little bit about your growth strategies there and what you're planning and how you think about that ecosystem or that community.
So that is our most important community, the merchant side of things. But in many ways, we are a platform, right? Because at the core of things, what payments does, we connect merchants to consumers and consumers to merchants, right? So everything we build is catered to that platform, right? The win-win-win situation. Like, what we build, is that making merchants' lives better while it's making the consumers' lives better?
Making you money.
Exactly, right? So that is really what we're thinking about. So again, it's cheesy to say, but like, we ask ourselves a lot, like, how can we fuel that flywheel that really, you know, enables merchants to sell more, enables consumers to buy better, and enables us to make more money.
And you touched on it earlier, but you've announced a new partnership, I think, with Airbnb. Is that right?
Exactly.
Talk about that.
Yeah, Airbnb it's a fantastic partnership, partly because I love brands, and Airbnb is one of the big ones out there, right? But I also think what our product does is to really unlock a new set of possibilities for partly Airbnb, tapping into a new target audience, but also for our target audience to really, you know, make their traveling dreams come alive in a much better, safer, smarter, and more flexible way. And that, to me, is the win-win situation. So Airbnb is a fantastic partner of ours. We're live with them in the US and Canada now and rolling out globally quite soon.
And then, so how do you think about those partnerships? Because as a CMO, you're much broader than that, as I mentioned earlier. So M&A has been a big part of your journey as well for growth, which traditionally CMOs haven't been... They've been at the table, but maybe not driving it. But you've been very ahead and leading the M&A conversation. How do you think about that versus partnerships, versus organic growth?
I mean, the thing is, to me, M&A, so they're fantastic in many ways, but what they really should be doing is just speed up the path that we're already on. Like, we are on a journey. We have a crystal clear target of where we want to be. And to me, it's very much about, like, do I have the time to wait, or do I want to pay for, you know, the fast track at Disneyland, right? That's the thing. And a lot of the M&As, the acquisitions that we've done, is really to fast track, where we say, if we build this, it's going to take us 2 years. If we buy it, we're live in 6 months.
Do you pay them in 4 installments, or?
Exactly. And then the question is, like, I'll save 1.5 years. Is that worth 10 million, 100 million, 200? Like, what is that worth, right? But we will never M&A our way into a completely new territory.
Yeah, yeah. So staying true to the vision.
True to the vision, just accelerate what we want to do.
Yeah. So then stepping back for a bit for the final few minutes, I know I'm part of a community of strategists and leaders that come around CMOs to solve problems, and I know you're passionate about defining the right problem. Do you want to talk a little bit about your leadership approach and some of what you see around a successful process that maybe starts with taking a step back and just defining the right problem? I think we hear a lot here about AI and tools and this widget and that widget, but a lot of my question is, well, what are we actually trying to solve for here? What problem are we trying to solve? What are we trying to achieve? And sometimes I get a blank look on people when I ask that question. And I know that's something that you kind of work into your team very deeply.
I hope so. So the way we think about it is like the old saying, like, the better you define a problem, the easier the solution is going to be, right? So we spend quite a lot of time on defining the problem, or the way we see it. So if we take trust, for example, we think a lot in terms of boosters and blockers. Like, what are the things that are blocking us from gaining trust in each market? And what are the things that can boost our trust building, right? So what we do is we put together diverse teams, because the more perspectives you have on a problem, the better you're going to be able to define it. And then we really have a go, asking a lot of questions, having a go at the blockers, having a go at the boosters, asking a vast number of people and perspectives on that problem, and really trying to define that. Because once that is defined, the rest is easy.
So, we're from Been There, Done That, but the question is, where next? So where next for Klarna? Where next? What are some of the things on the horizon that you're going to be looking at solving for in the next 6 to 12 months?
Like, to us, the big thing is growing from a payments company into a shopping company, right? Payments solve a subset of consumer issues and merchant issues. But what we really want to do is to elevate that into solving more things across the entire shopper journey, right? So the thing we talk about is not only the transaction, but pre-purchase, so discovery, curation, finding the right products, and post-purchase. What is the experience once you've actually bought something? Digital receipts, returns management, customer support, all of that, right? So expanding both upstream and downstream, that's a big thing for us.
And do you see yourself going into physical retailers and different options there as well?
Yeah, I mean, physical retail is still huge, right? It's still, in many markets, 85% of GMV. So we're working towards that. We have the Klarna card, we have our in-store offering, so that is probably going to be big within the next couple of years.
That's awesome. And any more plans for any more celebrities?
Of course, always.
Always more celebrities? Any hints?
Exactly.
Are you doing some deals here?
It's a good summary of our strategy. Always more celebrities.
Always more celebrities. Nice. I like that. I like that. I know it's quite loud. I wanted to open up, see if there are any questions. Any credit card payments companies that we've managed to annoy? John.
Oh, thanks. Yeah, no, I saw you speak last year here at Cannes, and you addressed it again today with the debit versus credit, Europe versus US, and you talked about it in a very transparent way last year, and you brought it up again today. So have you made progress on that perception problem over the last 12 months, and if so, how? And if so, why were you able to do that?
I mean, I think so, and I think it's our work that is behind that. But in all fairness, I actually do think it's the macro that is very helpful here. Like, credit card companies have screwed people over for decades. Many people are in a debt that they will never be able to recover from, and that is dawning on Gen Z right now, right? We see a mass movement away from credit cards into debit cards or other kind of solutions as Klarna. So although we're working on that to be a credit alternative, I do think just, the bad nature of credit is very, very, very helpful here.
Perfect. Thank you, John. Any more questions? Yeah, one over here on the left. I can't read your name tag, sorry.
Hi, I'm Rhonda.
I'm too old.
It's all right. So to that question, there have been quite a few news reports in the United States about how products like Klarna are actually leading Gen Z and younger consumers into debt. So I'm really curious because I've got folks in my family who use these products and I don't, but I'm very curious as to how this kind of a product does better with educating consumers about their debt and about paying off and so forth and so on versus how credit cards work.
Yeah. So, I mean, I can go on for an hour rant here, and not everyone is interested in how credit products are built up. But, like, one thing is credit should always be used carefully. We have careful underwriting systems and all of that in place. I think the biggest difference here is we underwrite people and do credit on a transactional basis, right? So when you buy a pair of sneakers, we do that underwriting and you pay for that sneaker, right? It's a one-time thing. With a credit card, you fill things up. You put your gas bill on, like like gas, groceries, sneakers, everything. And at the end of the month, you have this huge statement that you can or cannot pay, right? What we do is on a transactional level, which makes it much easier, much more transparent, and fairly, it's easier to stay on top of your finances.
Perfect. Thank you for your questions. Any more? All right. Well, with that, thank you very much, man. Really appreciate it. And thank you, guys. Really appreciate your time. Thank you.